XRP's price action in early September 2025 has been tense, trading around the high $2, 70 south to low $2, 80 south as investors anxiously eye a key support level. Recent reports note that XRP trades at $2.80, up 1.35%, even as other data shows it slipped to $2.78, down 1.78% in the last 24 hours. Crucially, both accounts agree that XRP has now tested its $2.70 support line for the third time in 6 weeks. Historically, this zone has been a turning point for the coin, but the broader market mood is cautious. The crypto fear and greed index is now in fear territory around 46, signaling risk-off sentiment. On-chain metrics paint a similarly weak picture. Active XRP addresses have plunged from roughly 50,000 in July down to approximately 19,250 now, and futures open interest has fallen sharply, about $10.94 billion to $7.70 billion in recent weeks. In short, investors seem less willing to take on new positions. That said, the fact that $2.70 has held so far keeps alive the possibility of a rebound. As one analysis pointed out, the coin's extended stay at this support has historically put traders on high alert for a turnaround. Technically, charts are giving mixed signals. The 4-hour chart shows a breakout from a descending resistance line C figure above which often precedes a bounce. Crypto analyst Ali Martinez has flagged that XRP's TD Sequential indicator is now flashing back-to-back by signals, calling it a rebound setup in play. In practice, this means momentum is beginning to favor upside. However, XRP still needs to clear near-term hurdles. Its 15 and 21 period exponential moving averages EMAs around the $2.82 to $2.83 area are acting as resistance. A decisive 4-hour candlestick close above those EMAs would confirm bullish intent, likely opening the door to roughly a 10 to 10.5% toward the next major target near $3.10. In other words, this technical setup holds, XRP could climb back above $3 within days. The chart above illustrates this bullish scenario. The breakout and shifting moving averages give a clear path up to about $3.10, $3.15. Traders watching these levels see that a sustained move above $2.82 would align with the positive TD sequential signal and could ignite that approximately 10% upside move. On the other hand, on-chain flow data injects caution into this outlook. The net flow chart above CoinGlass data shows that roughly $9 to $10 million worth of XRP was transferred onto exchanges in the past 24 hours, a sizable spike in supply available to traders. In fact, CoinLevel analytics report that nearly $10 million of XRP moved to exchange wallets in one day. This inflow suggests that some investors are rotating back to cash or preparing to sell. It's telling that Binance's XRP reserves surged by about 61 million tokens in the same period. Such large inflows to exchanges can quickly overwhelm demand and cap rallies. In practical terms, even if technical signals are improving, this fresh flood of XRP into trading venues creates downward pressure. Put simply, new sellers coming in at current prices could undercut any recovery. All else equal, heavy exchange inflows tend to translate into short-term supply on the market, which limits how far a rebound can run. Trader positioning around the key levels is equally striking. A CoinGlass liquidation heat map pictured above reveals that huge, leveraged bets are concentrated at the same $2.70 and $2.8 to $5 pivots. According to data, about $77 million of long leverage sits around $2.8 to $5, while roughly $19.5 million of shorts are stacked near $2.70. This clustering means the market is extremely crowded at those zones. If XRP convincingly breaks above $2.825, it would likely trigger a short squeeze, turbocharging the rally as those shorts get flushed out. Conversely, if XRP collapses below $2.70, it would liquidate many of the longs and likely accelerate the decline. In other words, The coin is currently trapped between opposing heavy bets. The imagery above makes this tangible. Piles of leveraged orders sit on both sides of price. Such a setup implies a highly volatile reaction is possible in either direction. Depending on which side breaks first, taken together, the data paint a mixed picture. On the bull side, several recent analyses emphasize that holding $2.70 is the key to unlocking an uptrend. If XRP can defend that floor, then a clear break above the descending channel resistance around $3.09 would open the way for a strong rally, potentially all the way toward $3.70, the apex of the triangle pattern. This scenario would invalidate the bearish chart and could draw sideline buyers back in. By one count, successfully staying above $2.70 could send the price up to roughly $3.09, $3.10 and beyond, meeting the 50-day moving average and key Fibonacci level. In short, if bullish momentum builds backed by the TD Sequential and a genuine reversal on the 4H chart, a 10 to 20% rally is within reach. However, the bearish case is equally compelling. Multiple sources warn that a break below $2.70 could unleash a sharp downturn. Technically, XRP has been forming a descending triangle pattern, a bearish continuation setup. Losing the $2.70 support would confirm that breakdown. Analysts project that the next low probability targets would lie much lower, around $2.48, $2.60, near its 100 and 200 moving averages. Selling continued, some XRP even sliding toward $2.08, implying roughly a 25% crash from today's levels. Indeed, one report explicitly notes a breakdown under $2.70 could trigger a move toward $2.08 in the coming weeks. Such a steep drop would happen quickly if leveraged positions unwind. In sum, failure at $2.70 could open the floodgates. In conclusion, XRP is at a critical juncture. The charts and recent inflows give bulls hope for a bounce, but material risks remain if sentiment doesn't shift. Current evidence suggests both outcomes are plausible. Defending the $2.70 support and clearing $2.8 to $5 could spark a strong rebound back toward $3.10, $3.70. Whereas a decisive break below $2.70 could mean a much deeper pullback into the $2.48 to $0.08 range. In a nutshell, XRP is sending bullish, technical signals, but only a confirmed breakout can convincingly tip the scales. Traders and investors should therefore monitor both scenarios. If new buyers arrive and key resistances are overcome, a strong rally may be underway, but if selling pressure dominates, a significant recovery will be delayed.